Good afternoon, all. Ira Epstein of Linn & Associates with your SPDR ETF wrap-up. And this is for Tuesday, and this is the 5th of May, 2020. When you look behind me, it's pretty much a sea of green. In fact, the whole week has been pretty much green. Once the market began reversing last week's losses, it made back in stellar fashion, a lot of that. But now the question is, and I'm going to pose this to you, we've come up rather dramatically. If the sell may go away theme is going to hold, we've come back enough where we shouldn't be making new highs, taking out the April highs. Could you? Of course you could. And then break. By the way, I know that I keep saying break, and I want to explain myself. I've been around this a long time. Breaks of the size we had, and then a straight up rally telling me we're going to see that hold, I have problems with, all because I'm a historian of charts. That's what you do as a chartist. And that doesn't mean you're always bearish, and I'm not, but you look for the what if scenarios. Well, right now the what if has made many of the bears eat their words because the market has gone in many cases over a 62% correction. And in the case of the NASDAQ, what is it, 1.5 points at today's highs from being unchanged for the year. So no, you can't get married to that. As a chartist, you let the chart guide your pattern. That's what this is all about. You've got to throw your emotion away. You've got to throw what you think away. A chart is a chart, and it knows more than the chartist. When we take a look at the tech sector, we've had a heck of a rally back up. The market cleared the 62 percentile. It's come back into an area here where, as an individual stock, well, this is certainly a big high that the market made, and it certainly took out April's high. But the April high or sell may go away is not on individual stocks. It's on indices. There's a difference. This gets more finite, as you know. Still very much in an uptrend. The pattern is still higher lows, higher highs, with a new high for the whole move made today. You'd have to take out 88.08 to break that pattern. The support under the market comes in at the 18 and the 100-day average. First the 100-day. Where do you think the resistance is? Tell me where you're seeing that Bollinger Band. It's right in front of you. It tried to get through it here. It's trying here. It's having a heck of a time. So I think the smart money is taking something off the table. And the reason I think that is because momentum is waning now. It's shooting here back and forth. Watch. Under 80, back over it. You'll see. Just back and forth here. That's overbought. That does not mean it can't go higher. I'm not speaking out of both sides of the mouth. I'm saying that I think if I had a client, that's what I'm telling them. Hey, that's where I think people are taking money off the table. And I do have clients. When we have in the SMH, we've got higher highs, lower lows, right? Not a trend. The market's hanging in here right by the 18-day average of closes. Momentum, which often leads price, is still pointing to the downside. We had one shot up at that upper Bollinger Band, and that was the game. And the market from there went into a nosedive and took you out of a trend. Is there anything here that can create another uptrend? No. Is there anything that can create a downtrend? Yeah. If you were to get and close underneath the 18-day average of closes tomorrow at 130.05, you would have the potential then of lower highs. I know how swing lines work, so that would draw down then. Would have lower highs. You already have the lower lows, so that would put into play the 200-day average, and if that gave ground, the lower Bollinger Band. As for the upside, it's not a trend. Since right here, the trend left, you made the lower lows, higher highs, and you're whipping back and forth. In the industrial sector, the pattern is still one of higher lows and higher high. The price is now 2 days in a row underneath the 18-day average of closes, which means the bias is turned down. Momentum, as portrayed by the slow stochastic, is already to the downside. You would have to get underneath 60.60. If that was taken out, the market would be in a downtrend, but right under you, $1.40 is the first Bollinger Band for support. More important, it might be an area where the markets have come up and now they start stalling. I'm always looking for what might be. And again, you cannot let it influence what you do. Flat momentum, higher trend, lots of resistance at the upper Bollinger Band. And I know you people get, and I hear it there, you know, Bollinger Bands. They have a big importance. And that's your resistance point, and the market's having a hard time there. If the QQQ, today's high was 220.14, am I right? Yeah. The high back here was 220.04. You've made a new high, right? So the market that had the April high, sell May, go away, this one got what? That theory still can be right over time, but the market did manage to take it out. What's also been the strongest of all the stock indices? If it's not been QQQ, I don't know what I'm talking about. That has been the strongest of all the indices in the futures too. As I said, if you look at even the cash, you're only 1 or 2% away from the highs in some of the different elements that make it up. In the emerging markets, I have a problem with this chart. This to me is just stuck in sideways action. You had your one challenge of the upper Bollinger Band. That's where I think pros took the money off. They had been in an uptrend, higher lows, higher highs, and now you've fallen back to hang there. You go into a downtrend. If the market hits 54.69, then you'd have to worry if you take out today's high again. Got it? In the gold to get bullish now, we're at an interesting part here. I think yesterday I made it clear the bears have to defend this 18-day average of closes. You have lower highs. Now with today's action, you have a higher low. And I think that right now the bulls are going to come out of the market. They're going to buy immediately. They'll have stops under today's lows. I'm giving you a guess here, of course. And 163.77 could be the next number. In the gold miners, this market was going sideways. You had hit the band, Bollinger Band. You came back to neutral, the line in the sand. It's overbought, not throwing out new signals here. But with today's action, you put both numbers in the slow stochastic over 80. Yesterday, they were both over 80. You get 3 days in a row, you're embedded again, and that market gets bullish again. All elements. This is right overbought now, but it could embed. This is on its way at looking good. What I wouldn't want to see as a chartist is today's low taken out. Why? My rule, just mine, is that when you take out the low of an outside day up, it often means that the market's lost that oomph that it caught with that move, and when that occurs, it often returns to the closest main moving average or a Bollinger Band, the closest of. Well, right here, the closest of is the 18-day average of closes. In TLT, the trend is down. It was down yesterday and it's still down, but it is now very oversold in what we call this neck. When a market does this, often you just don't get follow through. Doesn't mean you can stop trading it, but you got to really tighten in your parameters. If it can drop further, 163.72 target. To neutralize the trend, you got to take out 167.68. I'm very concerned how oversold it is right here. FXE, it has gone out of trend now. Coming in, this is how the market looked. One thing I said, the first challenge of an upper Bollinger Band, that's where I think if you're long, you're looking to take money off the table. Short, you're looking to take money off the table. What you can't afford to get under is 102.46. Now, momentum's turning down. If, and that's an if the pros wanted to buy at 102.82, I think they had to stop at 102.45. That breaks the whole trend. And today, it's exactly what occurred. So I think this market now is void of trend. I think it's now in a whipsaw pattern more than anything. So you put it all together, you try to come up with game plans. And each day I do that. Typically, right around 3:34 in the afternoon, I sit down, and that isn't me, as you know, but you see what I'm doing here? I talk this way in another video with specific buy and sell. This is what I want you to do. Here's why. Here's some fundamentals if that's important. You're going to get all my trade ideas. And I do it in the afternoon so you have, and we know we're going to get back to normal work and so on. You've got the whole night to review it. It works best when you take my morning futures video because spiders, ETFs, what do? They look to the futures. If you don't think so, okay. they're based on them in large part. So the QQQ, the SPY, DIA, they're all going to go right to that. They're going to look at what these do. What do you think the currencies are looking at? Not looking at the cash currency. They're looking at the futures. What do you think gold and silver is looking at? That's what they're looking at. And then you get to the QQQ. So other than the spiders, which are the narrow parts of these indices, these markets are being run by looking at the futures. So what I elected to do is do my spider ETF video in the afternoon for you. You look at what the futures are doing, you say, hey, he's still got that point. That's what he was talking about, and boom, away you go. Basically, you're getting a look-see before the markets open in these, and that's there. And in the morning, you're getting an update as to what's going on, because the futures will tell you what you could and could not be doing. Hope it makes sense. I know it does, and I like it a lot because they fit in together, and I'm able to coordinate them in the morning when I go back to doing this. So how do you get these? Well, you go to our website, and in our website, under the word research, you're going to see when we get there. Let's see, there we go. It's moving now. Under the word research, you're going to see the different videos that I put up for subscribers. The cost is minimal. And the reason there's a cost, this is where it's like going to the doctor. You're going to a doctor's appointment, blah, blah. If you wanted to talk to me, I talk to my traders. You get included with it the daily numbers for window envelopes that I don't even show them here, but they're very important. Another tool that you're using to peel off positions. And last, you're getting, if you want access on your phone, be it Android or Apple, we're going to give you the app to do that. All included at these ridiculous prices. It's about building the services over time. And you're my best ad. Tell people about us. That's what makes me want to keep doing this on YouTube and other places that make this free. I just dropped the ad one because for my time I wasn't getting enough viewership. These blow it away. So with that, I'm Ira Epstein. Hope you like what you've heard. I will see you all tomorrow.